In this video, traders, I want to talk about improving your technical analysis. Stay tuned. Hey guys, warm welcome to you. Thank you so much for joining me. All right, so let's cut to the chase. A lot of textbooks talk about some of these nice trading patterns, and we've got the benefit of hindsight, and we're all guilty of it, right? We're traders. We look at that and go, oh, I'd have taken that beautiful double top. I'd have definitely been on that bull flag. And actually in the real world, our hypothetical results that we look at is nowhere near what actually the results that we're getting when we're actually trading day to day. Why is that? Because many of these patterns fail. Many of these patterns aren't clear at the time. There's so many different things that are variables that we're taking into account at the time that just change the structure of it. And our brains as well are conditioned to see the patterns, but they don't see the fail patterns. There's loads of times these patterns fail, these technical analysis patterns, these time-tested patterns. I'll talk about that in a moment. But we don't see them because we go back to the chart and we don't go, oh, that was a failed head and shoulders, unless we're looking for it as a fail flag, unless we're looking for it specifically. We just see noise. But then when we see a bull flag, we go, oh, there's a lovely crisp bull flag there. So how do we improve our ability to spot a pattern that's likely to play out as expected? Because that's the key, right? Surely, as traders, our job is to have some prediction about where the market's going. We can't say, oh, yeah, we don't predict, we react. Well, yeah, we're kind of, but we've got to have, we're making some prediction, right? We're going long or short. There is a prediction there of saying, well, actually, I think the market's going higher, or I think the market's going lower. So we can't just dismiss that completely. It's a nice catchphrase online, sure, but we can't get away from the fact that that is also what we're doing. We are predicting. And also, I'm not a huge fan of the reacting thing either. I know that we do react to what's coming in front of us and the information, and we make a decision. But I think that reacting can cause, going off topic a little bit here, but I think that reacting can cause over trading. I think the sweet spot is to plan the trade with a sequence of, if these happen, then I will react in a certain way. So, let's say you've taken a bull flag, you're like, okay, this looks like it could be a bull flag. I'm ready for it. I see the parameters that I think are the right parameters for the bull flag to continue. If now we get this, and this, the flag lasting less period of time, this, that, the other, little dip under, all those other little things that we can go into forever, but we don't need to. Then I'll pull the trigger. So it's not necessarily reacting, go, it's a bull flag. It's planning and then reacting if a certain thing occurs. Okay, let's get back to the initial topic. How do we improve our technical analysis? Well, we have to do anything, guys, but I find it better if you take a step back from things and you say, right, what am I actually doing here? What is this chart telling me? Forget about the textbook and forget about the pattern. Forget about it's all very nice and it's all very technical. We like to solve things and humans love to see patterns. But what does it truly mean? And when we ask that question, we start to ask other questions. So imagine if we're looking at double top. Like, what does a double top truly mean? Well, it's a level that's not breached, and this, sellers are coming in. That's fine. All true. Yeah, okay. What does it really mean? It just means that at that point in time, the sentiment had shifted. The supply demand had shifted. Sellers have become more aggressive, etc. So you go, okay, fine, now what? And how does it help me? Then you start to think, okay, so what circumstances might that be valuable? Would that be valuable on a really low 1 minute chart in the middle of a range? Not really, because whilst we might get it, is it really going to happen? Do I really think that that's going to give me a high probability trade? Yeah, maybe not. But what about if we've had a big run up? Okay, big run up that's kind of had 3 or 4 pullbacks, one last hurrah, we're right at kind of a stretch level on an intraday chart, maybe we're stretched after a couple of days, hitting this key level, running out of steam, right sort of time of day, daily chart looks like it, comes back, deep pullback, decent time between peaks. We've done a complete video on the kind of intricacies of double tops, which is using, for example, this one, decent pullback coming up. That's a lot more structured, right? Because you step back and rather than just looking at the double top and going technical pattern, you've gone, okay, think. What's happening? Right, we are quite stretched. The daily chart, that's the higher time frame players. The other guys are moving the money. There's a reason why. There could be profit taking here. They could want to at least back off a little bit and see what price does. Oh yes, we get another test. Doesn't quite go through there. Okay, so you're thinking and then you're planning and going, right, that chart pattern makes sense to me. It's in the right conditions on the time frame that makes sense to me, in the higher time frames that mean they're going to have some longevity on the shorter time frames. Check, 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 check. Okay, now what do I want to see? What's the react portion I want to see? Okay, I want to see it fail. I want to see it this. I want to see it that. And so you're improving your technical analysis by just going a little bit further upstream and thinking about why the pattern occurs and what's the story behind the pattern. I love that story behind the pattern, because at the end of the day, you know, as I said many times, you guys subscribers, appreciate your subscription, by the way. You know, I say that this, and there's always a question I ask myself before I pull that trigger: why is someone going to buy it after I bought it? Why am I so smart that I'm at the front of this? What makes me the one who has the best price? Why is someone going to buy this after me? Well, if I'm going long and make this go higher, why is someone going to sell it after me? Because that's ultimately what happens, right? You have to be one of the first, or at least not the last, to the party to make the money. You can't. If you're last to the party, you're buying at highs. It's as simple as that. If you're first to the party, you sometimes got to wait a bit. You know, it's better than being last. But you know, if you're right and everyone else is right after, you can get the best possible price. But somewhere in the middle, in that first quarter of, hey, I'm not first, but I start to see a few people start to see it, and then I jump on it, and I want to be ahead of everyone else jumping on it because I want to sell into them. You start to think, and the game starts to be not one about charts and patterns and this, that, the other. And yes, these patterns do reoccur under certain conditions, but we start thinking why they reoccur. And we go, okay, it actually makes sense because it's stretched and one last push up, and people just aren't that excited about it anymore. The buyers have drift off. We've had loads of buyers coming in, loads of volume. Who does that leave left to buy? Not many people. We're at the right sort of time, we're at this, that, the other. All these sort of evidence you put together, and it makes more sense for you. And you go, okay, actually the reason that people are going to sell it after I've sold it is because there's a lot of people who are looking for further move because they're all caught up in the hype of this or whatever it may be. And actual fact, there's a good chance there's no more buyers up here, and we're at least going to have this overhang of sellers. Even if it's not that aggressive, at least pull it back to the prior low, for example. And so there's the reason why someone's going to sell it after you've sold it, or why is the reason. So it's thinking about this, and always looking at it through that lens just helps you center yourself, helps you focus yourself, and helps you, or helps stop you diving into things that look very nice from a textbook perspective. It's a very clean and crispy chart that you could put in a textbook under page 1 of reversals. Hey, double top, yes, and you can have thousands of examples. They all look clean, they all look great, and they've all got these kind of different things. But in the real world, we have to put it in perspective, and that's the context that's often missing from the textbook stuff. And why I think many people get so myopic with looking at, hey, it's got to be that pattern. The pattern's so good. It's like, yeah, but think. Just stop and think for a second. I'm virtually grabbing you by your lapels here. Can you feel it? It's really grabbing myself, actually. Grabbing yourself and going, think for a second. Why is this going to work? I'll give you a virtual slap as well. Give myself a virtual slap. You have to with trading sometimes. Grab yourself and you go, right. Think about this. There's no reason why someone's going to buy after me. You're on a 1 minute time frame. You're in the range. Yes, it's a double top or it's a double bottom, but who are you expecting to buy? Who are you expecting to drive this market higher and give you a profit? Crickets. No, you can't answer it. Whereas when you're in the right conditions and you have this structure and you look back and you go, hey, there's a story to this, there's a reason, the supply, demand, this, that, and the other. Then when you answer that question becomes, the answer becomes, that's right. That makes sense. And if I have my stop here and I do this, there's a reason behind it, all of a sudden that probability of the trades working just goes up way more than it does if you're just taking every single pattern. It's just thinking about things, taking a step back, putting the story to the trade, thinking about supply demand, how that works with the trade, and just change, you know, that one little change from a technical perspective, an operational perspective is massive. It's absolutely massive. And when you start to think of the markets in those type of scenarios and do that supply demand and thinking, why are people buying, why are people selling, what's happening? You don't have to go into the why as in, oh, they're buying because interest rates are this or inflation is this. That doesn't matter. Forget about that. You know they're buying, but from a technical perspective, if price has gone from 10 to 15 to 20 to 28 to 30 to 35, They're buying because they don't want to miss out. They're buying because they think it's so good it's going to. So as it gets higher, that becomes more of a FOMO buy than it does right at the beginning, right? So you start to say, well, these people might be FOMOing into it. And if I now see a reversal after I see extended and stretched and volume starting to die out, which is indicating that actually anyone who has bought is probably already in. We've had 2 or 3 pullbacks. We've had multiple tests. This is one last thing. Sellers are probably looking to take profits. Shorts might be looking to get on this. Buyers are going to get trapped if they bought in the last quarter. You start to build a narrative behind it. And whilst you don't want to get so caught up in the story, you're stubborn. We don't want to be stubborn, but we do want to be in a position where we go, okay, that makes sense. I've now got confidence in the deal. I can now structure the deal effectively. I know where to put my stop if I'm wrong, because the story will suddenly not make sense. I know what to look for, and I'm not going to snatch at profits if I suddenly get a little, 5-minute candle in my direction. I'll take some profits. So no, this is playing out. What's the story? The story is X. The story's starting to play out as I expected. Where does the story end for me? Where's the next chapter? The next chapter is when we start to test through that low, or whatever it may be. So thinking about that, taking a step back, I think that'll improve your technical analysis. Hey guys, thank you very much for watching. Appreciate you. Keep your risk managed. Take care. I'll see you in the next one. Bye-bye.